Canadian Chamber of Commerce, Wildcat Oil Tools, and give one little last mention to the final few of the vendors that I did not get to earlier. Lenormand Operating, Templar Energy LLC, Upland Resources, First Bank Southwest, and Covenant Title. Canadian Water Well Rental, and Hadaway Consulting Engineering. Thanks to all of you. All right. Thank you all for sticking around. Well, I have been told by not just Andy, but by others that if you're interested in this industry and what the energy outlook may be in coming months, you don't want to miss this segment. So we've billed him high, and we'll see if he can live up to our expectations now. But we understand we are very fortunate to have for our final segment here tonight. Please help me, courtesy of Interbank and Canadian, welcome from Exxon on the Energy Outlook, E.R. Davis.
Thank you. Can everybody hear me okay? Am I loud enough? Okay. I do this sound thing for church, so I'm very attuned to making sure that I sound okay. Appreciate you inviting me to be here today. I was in Houston just this morning, flew up for this event, looking forward to talking to you. Let me introduce myself. My name is Ernie Davis. I am originally from Indiana. I'm a chemical engineer. I went to school at Purdue University, very similar university to Texas A&M. It's a land-grant school. I've worked for ExxonMobil for my entire career, which is about 26 years now. Most of that's been in Texas. Even though I'm not from Texas, Texas is kind of my home. I guess I'm going to have to stick back here a little bit. However, I do not work in oil and gas. I'm actually on the chemical side of our business. Currently the business analysis manager for the chemicals technology organization with ExxonMobil Chemical. But for about the last 8 years, I've been involved in a program in which ExxonMobil has utilized employees to go around and kind of share our thoughts on the energy industry with groups such as yourself. And so what I'm going to be talking about today, as noted, is our outlook for energy, not just in the next couple of months, but out through the year 2040. And so this is a long-range forecast that a team of scientists, engineers, and economists at ExxonMobil put together every year, looking out the next several decades to assess, what's the outlook for energy? What's the demand going to be? What's the supply going to look like? And take into account economics, politics, the environmental regulations, and so forth. It's a bottoms-up, data-driven analysis, and we actually use it internally to ExxonMobil to make investment decisions. We choose to share it publicly. We share it with politicians in Austin, Washington, D.C., and other capitals around the United States. And we share it with the public just for the purpose of educating people about the immensity of the energy business and where we think that energy business is going to go in the future. This outlook focuses on the consumer of energy around the world, the billions of people who are very dependent on us giving them reliable and economically affordable energy supplies. It takes a look at the choices that they'll make on the types of energy they consume. Those choices driven by economics, politics, the environment, and so forth. And so our outlook is intended to put together a realistic view on where we think the energy industry is going to go over the next couple of decades. And like I said, we do use it internally to make our own investment decisions. So I'm going to probably throw a lot of numbers at you. I apologize in advance. But in order to take a look at the energy industry, you have to take a look at what types of factors affect the energy industry. And one of the biggest ones is the population of the planet. And so between now and 2040, we expect the population of the Earth to increase by about 25% to just over 9 billion people. As you add more people to the planet, each of them need additional energy for their everyday lives. Another big driver, probably a bigger driver, is gross domestic product or economic output. As you can see from this chart, while the population will grow by about 25%, gross GDP for the entire planet will almost double. And what that means is that increasing levels of wealth in economies around the world, an increasing middle class in countries around the world, as well as a significant increase in the amount of energy demanded by the populace. However, even though GDP will double, the demand for energy will not. In fact, as a result of increasing efficiencies and improving technologies, we anticipate the global demand for energy to only increase by about 25% over the next 2.5 decades. We also anticipate, based on technological advancements, as well as efficiencies in the way we use energy, that CO2 emissions will still increase by about 10%, but they'll actually peak around 2030 and then start to roll over and start decreasing. The combination of lower CO2 emissions and cleaner burning fuels will result in a very significant decrease in the energy or the intensity, CO2 intensity of the world's economy. And we're going to touch on how that's achieved as we go through this presentation. So, energy powers modern economies and living standards. By the year 2030, the world's economic middle class, defined as having enough disposable income to not just meet your basic needs, but be able to begin to indulge in some luxuries such as a car, air conditioning, and so forth. We anticipate the middle class to grow from about 3 billion people today to about 5 billion people. So over 50% of the world's population by the year 2040 will be considered middle class. As I said, global energy demand will increase by about 25%. But as you see in the coming slides, almost all of that growth will be in what we call the non-OECD countries. So OECD is the Organization for Economic Cooperation and Development. The membership changes a bit, but roughly speaking, that's Canada, US, Mexico, Europe, plus Australia, Japan, and South Korea in general. So almost all of the increase in energy needs will be outside of those countries. The OECD will be relatively flat. Electricity. Electricity is the largest and fastest growing energy sector, and it will more than double. The use of electricity will more than double in non-OECD countries over the outlook period. And the electricity generated by wind and solar will grow by over 400%. In fact, as I was driving from Amarillo to here this afternoon, I couldn't help but notice all of the wind turbines that you have out there. That's a large number of wind turbines. You know, wind and solar today may not account for a very large percentage of the total global energy mix, but it's definitely the fastest growing by over 400% between now and 2040. The other energy source that's going to expand significantly is natural gas. As more and more countries, as society really pushes for lower carbon intensity fuel mixes, more and more industries are going to shift away from oil or coal, particularly coal, to natural gas. So we'll see an expansion of natural gas's use, not just in electricity, but in other industries as well. Oil will continue to play a major role. Still obviously very heavily linked to the transportation sector. However, the real growth for oil will be in chemical feedstocks, which is the business I'm in. And when I say oil, I'm talking oil as well as natural gas liquids. And as I noted on the previous slide, the combination of wind, solar growth, as well as the expansion of the use of natural gas will lead to a significant decarbonization of the world's energy system. About a 45% reduction in the carbon intensity of the world's economy. Well, I apologize, some of these slides don't fit on the screen quite as well as they should. So what's the energy picture look like in the future? So to answer that, let's take a look at some long-term demographic and economic trends. I've kind of already touched on it. I talked about GDP doubling, and that's what this chart looks like. So the world's economy will more than double, and you can see the OECD or developed world will grow, but the real growth is in the non-OECD. They'll grow by over 170%. The chart on the right kind of breaks that down. The real area for economic growth will be China. In fact, between 2010 and 2040, you can see that China's GDP will grow just about as much as the United States and Europe combined. So a significant amount of GDP gain just in China, followed fairly closely by India. And you can see on an annual basis, the United States and Europe will grow by about roughly 2%, but the rest of the world is going to grow by greater than 4%. So that's really where the energy needs are going to be, or in those countries that are growing their GDPs faster. So purchasing power, that's basically GDP per person, wealth per person. You can see that it grows in pretty much every region. But what's really striking, though, is the growth rates for China and India. I mean, even Africa's GDP per capita grows, but at a much smaller, much slower rate and a much lower level. It's the GDP per capita in China and India that's really going to drive energy consumption in the future. And I talked about that middle class. Roughly 3 billion people today in the middle class. By 2030, it'll be over 5 billion people. And there's not really much of an expansion in Latin America, Europe, and the United States. Almost all of the growth is in Asia Pacific. That's China, that's India, Southeast Asia, and so forth. And so when you look at GDP, you look at purchasing power, expansion of the middle class, all of these trends tell us that it's going to be in Asia Pacific, China, India. That's where the real growth in energy demand is going to come from. There's a very good correlation between the amount of electricity consumed per person and the wealth of that country per person. You can see as wealth or GDP per capita goes up, so does electricity usage go up. You can see United States, Singapore, Kuwait in the top right of this graph. What's very interesting is in that box in the lower left, half of the world's population, a little over 3.5 billion people today, barely consume enough electricity just to power your standard household appliances. And about 1 billion people out of 7 billion, so about 1/7 of the world's population, don't even have access to electricity today. And so that's our challenge as an energy company, is to deliver safe and reliable energy supplies to the world's population. Not just those that don't currently have it, but those that will be acquiring additional wealth and moving into the middle class in the future. So, we break down energy demand. I talked about energy demand only growing by about 25%. This chart is a really good illustration of if energy demand followed GDP, world GDP, which it has done historically, it gives you an idea of how much energy would be needed by the year 2040. But due to gains in efficiencies, gains in technology, there's a fairly significant energy savings. And so population grows, GDP grows, but energy demand only grows by about 25%. Another very interesting aspect of this chart is the OECD at the bottom. So that's the United States, Europe, Japan, Australia. We're projecting almost zero growth in energy demand in total. Almost all of the demand growth is in China, India, the rest of the world, non-OECD. In fact, if you look real hard, you'll actually see that the OECD energy demand actually starts to slowly go down. So by the year 2040, the world will need 680 quadrillion BTUs of energy. And the non-OECD countries, by the year 2040, they'll consume 70% of the world's energy. And you can see the United States, I talked about that OECD down there, kind of flat to down. You can see even a breakdown of the United States. The United States consumes roughly 18% of the world's energy today, but you can see by 2040 it goes down somewhat significantly. So I've gone through a number of slides really trying to drive home the same message. The energy demand will grow by about 25%, but it won't grow by as much as GDP does, and almost all of the growth will be in the non-OECD countries. So, let's break down energy demand. So I'm going to take you through some slides on demand and then some slides on supply. So we take a look at energy in 4 different sectors: the transportation sector, the residential commercial sector, the industrial sector, and electricity generation. And this chart will illustrate energy demand for these 4 sectors, what it was in 2016, where we think it'll be in 2025, and ultimately in 2040. It also breaks down the type of energy that's being used to meet that demand within each of those sectors. So you can see, obviously, in the transportation sector, cars, trucks, planes, boats, the vast majority of that energy demand is met by oil. And oil will continue to grow in that sector. Residential, commercial, you can see there's still a lot of biomass, gas, not a lot of oil. Industrial is kind of split evenly between coal, gas, and oil. And then electricity generation. Electricity is actually the most diverse sector, utilizes the widest array of types of energy. It's the largest of the 4 sectors, and it's also the fastest growing. And you can see, as we progress out through the outlook period, there's a very significant increase in the use of natural gas in making electricity. In fact, you can see that in the United States. I actually printed off an article that I found online just 2 weeks ago from thehill.com about another Texas coal plant announcing that they're going to shut down in 2020. I think it's the 5th coal-fired electricity generation plant in the state of Texas to announce it's going to shut down this year. That's according to their story. But that's an illustration of exactly what this is saying right here. Is more and more electricity generation is going to shift from coal to natural gas. In fact, natural gas demand increases significantly in all sectors. It's kind of hard to tell in some of the other sectors, but even in transportation, compressed natural gas in use on semi-trucks. I know in Houston, when I drive down the highway, a number of the large truck stops now have compressed natural gas stations. More and more trucks I pass on the highway are not burning diesel, they're burning compressed natural gas. And so natural gas is even growing in the transportation sector. So let's break down that transportation sector. Within the transportation sector, energy demand will definitely increase as the world's economy produces more things, adds more wealth. There'll be the need to transport more goods. And so what you see here in the transportation sector, energy demand goes up, but the demand is really focused on aviation and basically heavy-duty trucks. In fact, due to the proliferation of hybrids, fully electric vehicles, as well as the efficiency of the internal combustion engine, you can actually see that oil consumption, primarily oil consumption in light-duty vehicles, will peak around 2020 and start to decrease. What's really driving the growth is in your heavy-duty commercial trucks transporting goods, as well as aviation. Some for marine as well. And this is another very good illustration. Historically, energy consumption in the transportation sector was very closely linked to GDP. As a nation's economy grows by 10%, the amount of gasoline, diesel, and so forth for cars and trucks also grew roughly the same. But in the early mid 2005, 2006 type time frame, we started to see a very significant divergence between the growth of GDP and the growth of fuels utilized in the transportation sector. And as you can see, around 2020, we expect demand for the light-duty fleet will actually turn over and start to decrease. And commercial will continue to increase. But the decoupling between GDP and transportation fuel consumption will continue to widen. And that's just driven by efficiency. Right now, the average miles per gallon in the fleet is roughly 30 miles per gallon. We anticipate that the world's fleet will be roughly 50 miles per gallon by the year 2040. The next industry that we take a look at is industry. So in industry, energy sources are used not just as a fuel, they're also used as a feedstock. The industry that I participate in, the plastics industry, we take in natural gas liquids as the feedstock for many of our plants. So as economies grow, the industrial sector will grow, the energy demand will also grow. The industrial sector consumes about half of the world's energy today. Oil, natural gas, and electricity make up roughly in the growth area, each one of those make up roughly a third. And you can see at the bottom, oil consumed for chemical feedstocks is going to grow significantly. And that's the oil used for fuel is about constant, but it's really the feedstock, chemical feedstocks. And you can see that in my area of Texas, where we're building a whole bunch of new petrochemical plants all along the coast of Texas, using natural gas liquids out of the shale plays, converting it as a feedstock into plastics, and then shipping it to Asia Pacific, which is where the demand for those plastics currently is. Significant increase in natural gas, as well as electricity. Like I said, the growth in energy in the industrial sector will be split roughly between a third between oil, natural gas, and electricity. So one of the reasons for that chemical feedstock line is, as people move into the middle class, as the population of the world increases, the demand for plastics goes up significantly. In fact, plastics actually is growing faster than GDP. And you can see that on the olefins aromatics production line that's above the GDP curve. Plastics manufacturers are using plastics as lightweight, durable materials, improves the performance of their products, lightens the weight of their cars so they can improve fuel economy on their cars. And so the demand for plastics is actually growing faster than GDP. So electricity, like I said, electricity is probably the most important sector to monitor when it comes to energy demand. It's the largest of the four sectors. It's the fastest growing. More and more people are consuming more and more electricity, particularly for air conditioning. So here in this chart, we've broken down electricity generation by region. And this really highlights the diversity. So depending on what part of the world you're in, there's a significant difference in the type of energy that's used to generate that electricity. So in the United States, you can see that, right now, electricity is generated with coal, natural gas, nuclear, wind, and solar. And you can see that significant increase in wind and solar, significant increase in natural gas, and a very significant decrease in coal. And that's what we're seeing even today, and this trend will continue. As society demands lower carbon-intensive energy sources, as the price of natural gas supports energy generation from natural gas versus coal, more and more energy producers are going to shift away from coal to natural gas. Even in China, which is currently a very large coal user, we expect their coal usage in the electricity generation sector to peak and level out. But the only place that coal will grow is in Asia Pacific and India, where they don't have easy access to natural gas. And I've mentioned the growth in wind and solar and renewables, and you can see from these bars that those sources of energy are growing significantly. So I've covered the demand side. Let's take a look at the supply side. So the supply mix to satisfy that energy demand is at a historically high or historically diverse spot, and will continue to diversify as technology improves. Whether it's oil, natural gas from shale, deep water fields off of Brazil, or our latest find in Guyana, nuclear reactors in China, or wind turbines, solar arrays everywhere, the supply of energy is going to diversify significantly. So, these next two slides are probably, I guess, kind of sum up the whole supply-demand picture for the world. First, we'll take a look at liquids. And liquids is your conventional crude oil and condensate, but it's also deep water, oil sands, tight oil, natural gas liquids, biofuels, broken down by region. So if you take a look at North America, you can see basically conventional crude declining, an increase, an expansion of oil sands, and a very large increase in tight oil, shale oil. So much so, these dots represent demand, the bar represents supply, so much so that North America will be a net exporter of liquids in the very near future. Based on this chart, we're showing 2025. I think it's actually within the next couple of years that we're going to cross that point and start exporting liquids. As a North America, that's Mexico, China, or Mexico, Canada, and the United States. In Latin America, their supply will also increase a bit, slightly above demand. In Europe, their supply will go down, but their demand will also go down. They'll remain a net importer. Just as they do today, Russia, Caspian region, the Middle East, very significant exporters of liquids. And then Asia Pacific, their demand is going to go up significantly, but their supply really isn't going to change that much. In fact, by the year 2040, Asia Pacific countries such as China, they will import 80% of their liquids. That's how much their demand will outstrip their local supply. The story is not that different on the gas side, although the people that put this presentation together flipped the bars and the dots around, just to make sure you're still awake and focused. But here we break down gas between conventional production as well as unconventional production. And then for those regions that have to import, we take a look at how much they'll get via pipeline and how much they'll get via LNG. And so, much like we saw on the liquid side, on the gas side, this is 2016, we're pretty much right at, in North America, we're pretty much right at meeting supply and demand. I think we're actually now a net exporter of gas. And so that's why a number of LNG export terminals are being built along the coast of the United States. Even ExxonMobil, where we, in the Golden Triangle area, the Beaumont, Port Arthur area, we built an LNG import terminal a few years ago because we thought that the U.S. economy was going to grow and we were going to need to import natural gas. Now, thanks to the shale revolution and this huge increase in unconventional gas production, we've actually applied to the federal government to convert that import terminal to an export terminal. And we're not alone. I think there's 4 or 5 other companies that did the exact same thing. About a decade ago, we built import terminals, never started them up, and now we're converting them to export terminals so that we can take all of this excess natural gas and export it to other parts of the world, such as Asia Pacific, where you can see, just like on the liquid side, their need for gas will rise significantly above their supply, and they'll take in significant imports of LNG. Russia, Caspian region will continue to be a net exporter. Europe will be a big importer, more so by pipeline than by LNG, but even they will increase their LNG imports. So, as the world's population approaches 9 billion, we're challenged to improve living standards for all of those people. We expect progress will be powered by human ingenuity. Technology will be vital. The development of technology, not just in allowing us to get access to new and more diverse types of energy sources, but as well as driving efficiencies in the way we use that energy. So ExxonMobil is committed to doing our part. We're one of the world's premier technology companies when it comes to oil and gas. We're well positioned to continue providing effective solutions to help meet the world's energy needs, while at the same time addressing the carbon emissions associated with that energy to avoid or address the risk of climate change. So just to kind of sum up, and I realize I've run through this a bit faster than I normally do. I cut a few slides out because I was told I only had 45 minutes, but seeing as I'm the last presentation of the day, I'm sure you won't mind finishing up a few minutes early. We talked about energy demand. It's going to grow. It's going to grow by roughly 25% over where it's at today because the population is going to grow by roughly 25%. But the world's economic output is going to more than double. So we're using energy much more efficiently than we used to, and that trend will continue. Our mixture of what types of energy we're using to meet the world's energy demand is shifting to a lower carbon-intensive mix. As wind and solar grow, as nuclear grows, as coal is displaced by natural gas, the CO2 emitted to the atmosphere per unit of energy is going to go down. And so the combination of energy demand not growing as fast as GDP, and the mix of energy that we use becoming less carbon intensive, the energy per unit of GDP and thus the CO2 emitted per unit of GDP is going to continue to decrease. This is one of my favorite slides, and I think it's my last slide. This takes a look at the world's fuel mix going back all the way to roughly the Civil War. Back in 1860, we used coal and wood. It's pretty much our only 2 sources of energy. And you can see as technology has been developed, the mix of energy that we use has evolved significantly. Around the 1900s, we started to introduce oil, brought in natural gas. They grew significantly. Then in the 1980s, we introduced nuclear. Hydro came on. And then in the 2000s, we started introducing unconventional gas, deep water, oil sands, tight oil, and so forth. But it's a really good illustration of the message I've been trying to share with you today is natural gas is going to grow significantly when you put together conventional and unconventional. Oil will still be a major part of the mix. However, it's remaining a part of the mix because of its use as a chemical feedstock. And then, as you can see, the use of coal is going to decrease significantly. So, I hope I've touched on the major points enough times that you kind of get the picture. I can't predict the price of oil and natural gas, but this is what we see from a global perspective when it comes to the energy market. And like I said, we don't do this just for fun. We do this energy outlook every year and utilize it to drive our investment decisions. And so, that might explain why, if you look at this and you see the growth of natural gas, might explain why we've become the largest natural gas producer in the United States. Why we've made certain investments in recent years to increase our exposure to some unconventional gas resources. The Energy Outlook is available online. Trust me, I've pared it down. It's like 100 and some slides. It's got a lot of great data in it. It's available online at exxonmobil.com. I invite you to get involved, go check it out. Don't just listen to me today. The energy mix, or the energy industry, is a very large industry. Talked about, like I said, by the year 2040, 680 quadrillion BTUs of energy to power the world's economy, to bring electricity and gasoline and diesel to 9 billion people around the world. It's a very immense industry, and it's changing. It's constantly evolving due to technology, due to politics, due to focus on the environment. It's going to continue to change, and so that's why we update this study each and every year to keep up to date on those evolving trends. So hopefully you've learned something. I do appreciate your attention, and I'll take questions if you have them, but thank you very much for your time.
Thank you. Thank you, Mr. Davis. I think you will have some questions. Let's begin right here.
Do you have a perspective on the new trade agreement or redone trade agreement with Mexico and Canada, how that may factor into your long-term projections?
Well, the new trade agreement, I think, was just finalized with Canada like a day ago. Last night. Yeah, was it last night? Okay. So I don't know the details of it. I think the majority of the issues that they discussed were around auto parts sourcing, access to Canada's dairy, as well as percentage of cars that are produced by people making a certain wage. So on a high level, from what I've read in the news, it looks like it will have some impact on the auto industry, but I don't have a good feel for how it's going to impact energy. So.
What about agricultural products?
I know even less about agricultural products.
Anyone else with a question?
I did grow up in Indiana. I used to know a lot about corn and soybeans, but not so much anymore.
As I go to our next question, Mr. Davis, I'm interested, does the American coal industry survive?
Well, I mean, I don't know that I can comment on whether an industry is going to survive or not. Coal is the use of coal, based on our outlook, is going to decrease. Now, whether the industry within the United States survives or not, I can't answer that question.
So do these countries that will continue in the future to rely on coal import any of it from us, or do they have their own?
That's a great question. We're not in the coal business, and so I don't have a good feel for that. I know India and China are very large consumers of coal today, but I honestly don't know if they import from us or not.
So as someone who's in this field who has an opinion, as you see the president doing so much to prop up coal, do you look at it as something this is a good thing, or this is a temporary thing that's politics and?
I'm not going to venture an opinion on that. I don't think I'll. The outlook, obviously, these are new developments, so our outlook obviously doesn't factor that into it. When we redo the outlook next year, there's been a lot of developments when it comes to free trade and tariffs. I think even China has announced that they're going to put a tariff on energy imports, which impacts LNG, I believe. I'm not an expert in that area, so I don't know how big the impact will be. But obviously, one of the things that I tried to stress at the beginning of my talk, our energy outlook is meant to be a realistic look into the future. And policy decisions that impact trade definitely will impact this outlook. So what you see today, in today's outlook, may look very different than a year or two from now as a result of some of the decisions being made.
Thank you.
Okay. Can you hear me?
Yes.
Okay, good. Thank you. I noticed that you said in 2020 you're going to see a peak of light-duty vehicles. And I noticed on your visual that trended on into 2040. Then my question is, where do you see that going for gasoline-powered or petrochemical or or the oil and gas industry? Petrochemicals, different story. Oil and gas industry going as far as vehicle production? Is it going to trend toward electric vehicles? And what is going to be the difference in an environmental impact as compared to the disposal of batteries to the use of gasoline?
So that's a great question. The chart that I had with regards to light-duty vehicles was not the number of vehicles, but actually the energy demanded by those vehicles. So obviously by that chart, the number of vehicles around the world will actually increase significantly, particularly in countries in Asia Pacific, China and India in particular, as those populations, as large numbers of their population move into the middle class and they can afford cars, they're going to buy cars. So the number of vehicles around the world is going to increase significantly. The number of miles, total number of miles driven by vehicles is going to increase by like 60% between now and 2040. So what's rarely significant, there's a lot of slides I had to cut out of here for time. What's really significant is if you look at the total number of cars, total miles driven around the world, it's going to increase significantly, yet the energy demanded by that light-duty vehicle fleet is going down. And that's because of electric vehicles, hybrid vehicles, as well as the fuel efficiency of the internal combustion engine. And so we actually see for light-duty vehicles, the total demand of gasoline decreasing. It will be offset somewhat by growth in the commercial sector, as I noted. Heavy-duty vehicle energy demand will go up, but that will not just be diesel. That will also be compressed natural gas, maybe even electric if Tesla is successful in developing their all-electric semi-truck. But as far as environmental impact and battery disposal, I don't have the data to be able to comment on one versus the other. One thing I will say, though, is there's a common misconception in the general public. An electric car is not emission-free. The car itself may not emit any emissions, but there's still a power plant somewhere that burned coal, burned natural gas, or ran a nuclear reactor to make that electricity. And so there is some contribution to the environment, even with electric cars. Now, that contribution is going to go down, not necessarily because of the car, but because those electric power plants are converting from coal to natural gas, and because there's more and more wind turbines in North Texas, based on what I saw this morning. And so the diversification of electricity is also minimizing the impact on the environment. But as far as battery disposal and the the total effect on the environment by an electric vehicle versus a gas vehicle, I just don't have the expertise to comment on that. Sorry.
Another question? Go ahead, sir.
A couple of questions. What do you look at the long-term use of ethanol in mixtures, in gasoline mixtures? And the second question is, what do you look at for the long term for wind? I mean, I know it's increasing now, but is that going to be is that a really long-term energy producing source?
So I think I can't speak to ethanol from a blend perspective. Where is it? I think it's on the liquid supply page, however. That blue bar is biofuels, and so that's ethanol. And so we do see that ethanol will grow some. I mean, if you look at these blue bars, they grow a little bit, not significantly. I honestly don't know where ethanol's headed from a blend perspective. The electricity generation slide really tells you, though, wind and solar, we do based on what the data that we've looked at, and a lot of this data is publicly available. I mean, we're not in the wind industry in ExxonMobil, so we don't have any internal data on wind. So we're using data from, the International Energy Agency and so forth. But yes, we do see the growth in wind continuing, wind and solar continuing.
Based on your previous slide you had pulled up on the liquids there, as we move into areas where North America, obviously Russia, Middle East, continue to be net exporters, do you see, and I won't get into price at all, but judging by this, I can't exactly tell, and it may be a slide that was just not shown today, do you see Asia Pacific actually picking up that slack and being able to pick up that extra energy we're able to export?
Yeah, I mean, you can see it. I mean, you see it right here. These black dots, this is the demand for liquids in Asia Pacific. And so as our demand for liquids plateaus and as Europe's demand goes down, we become net exporters. Yes, Asia Pacic's going to pick that up. I mean, at the end of the day, the energy industry as a whole is going to find a way to supply what's demanded. It's just a matter of what type of fuel is supplied and at what price. That I can't predict. But yes, I think that based on, like I said, by the year 2040, Asia Pacific will import 80% of their liquid needs. And so any region that is a net exporter, they're going to have a market in Asia Pacific.
Go ahead, sir.
I was going to ask you if you've heard anything about the clean coal burning. Is there anything to that, clean coal burning of emissions?
I'm not that familiar with it. I know it's a technology that they're trying to develop. At ExxonMobil, we're also working on what's it called? Carbon capture and sequestration. Where basically you burn natural gas at a power plant, and then you capture the CO2 emissions that are going up the smokestack, and instead of going out into the atmosphere, we capture them, compress them, and inject them back into the ground. I think that's what clean coal is doing as well. I honestly can't speak to the coal industry in detail because we're not in it, but I do know we, as a company at ExxonMobil, we are working on carbon capture technology. And so I would think that would be applicable to, any fossil fuel that's being burned for electricity, whether it's coal, natural gas, or so forth.
This may be a political question, but if China, Asia Pacific's going to be that dependent on importing, how much are they going to try to take over those sources?
That I can't answer. I mean, that's a great question, but that one I can't answer. Yeah, I mean, obviously, let's see, gas. So I think the most recent, and this is not ExxonMobil talk, this is Ernie Davis talk. The most recent news that I've seen around tariffs, it's my understanding that China has said that they will now tax energy imports or place a tariff on energy imports. And that's a very interesting political decision given that they import a lot. So, they're basically raising prices on their citizens, basically, because so much of their electricity, so much of their energy demand is supplied by imports. They're now taxing that import, if you will. But as far as what they choose to do politically or militarily from the source perspective, I'm not sure I want to even contemplate that. So.
Mr. Davis, this is largely a natural gas producing region and has been for many decades. Based on your analysis and ExxonMobil's analysis, would it be your general thought, based on supply and demand and based on all these factors you've given us, that overall the trend would be to see the increase in the value of natural gas as time goes forward?
Yeah, I mean, hopefully you've seen a general theme through my whole presentation that the demand for energy around the world is going to increase. Well, at the same time, governments as well as society in general are demanding that we emit less CO2, that we minimize or reduce our impact on the environment. And that's driving two big trends. And I hope you saw those trends in this chart. It's driving the growth in wind, it's driving the growth in solar, and it's driving the growth in natural gas. And so globally, the use of coal is going to decrease. Oil is going to grow, but how much is converted to gasoline for cars and light-duty vehicles is actually going to go down. But we feel, based on our outlook, we see very strong trend for natural gas in transportation, electricity generation, and even in industrial. So, as far as where the price settles out, that all depends on how hard it is to get the gas, but the demand certainly appears that it will be there. And so, like I said, 5 Texas coal plants, just in the state of Texas, announcing that they're going to shut down. They're going to replace that electricity generation with either wind turbines, solar panels, or natural gas. So I think the demand for natural gas is going to be fairly strong.